Hello and welcome to our webinar, 1 Year to Brexit, Impact on Financial Services and Inbound Business. This webinar is part of a series we are giving to help business owners understand how and when Brexit will affect doing business in the UK and beyond. The webinar is a collaboration between Citron Cooperman and Moore Stephens, our international association, who we work with constantly on many joint projects and clients. For today's panel, I will be moderating the panel of 3 experts from Moore Stephens London, all heavily involved in understanding and consulting with their clients as they navigate Brexit. They are James Eldridge, a corporate advisory director at Moore Stephens London, Andrew Jacobs, a director of regulatory consulting in Moore Stephens London, and Charles Portsmouth, a director in Moore Stephens London. So here are the objectives of today's webinar. First, for our audience in the States, we will refresh your memory on Brexit. Then we will dig into some Q&A around issues dealing with the impact of Brexit on the financial services industry and inbound business. So let's get right to it. So first, let's go over a little bit of background on Brexit. On June 23, 2016, UK voters decided to leave the European Union in a national referendum. The referendum was a simple yes-no question, but was arguably the most complex political problem of our generation. In March 2017, the UK government gave formal notice to the EU that the UK intends to leave the EU. That started a period of negotiations about the terms on which the UK will leave, and those negotiations are currently taking place. The UK and the EU are negotiating the terms of the UK's departure from the EU and the relationship that the UK will have with the EU in the future. That the UK and the EU have agreed that there will be a transition period during which the final terms of exit will be agreed to. Concerns remain that there will be a hard Brexit, or an exit where there's no deal, instead of a soft Brexit where both parties may benefit from an agreement on certain areas such as trade and access to markets. The rules give 2 years for these negotiations to take place and for a deal to be agreed to. Unless something unexpected happens, the UK will leave the EU by March of 2019. But what is the European Union? A single market of currently 28 countries grown from the original members over the past 40 years, based on 4 underlying principles: the fundamentals of freedom of movement, goods, services, people, and capital. The European Court of Justice has authority of member states. This provides an overarching authority regarding the laws governing the 4 principles. As a result of being part of the EU, we have customs union allowing tariff-free goods and services. In other words, goods received into or initiated within an EU country are not subject to additional tariff when moved from one EU country to another. Passporting of financial services. This includes recognizing the qualifications of industry professionals and the standards that they use, such that services can be provided cross-border without further control or authorization. And the right to work in any EU state. This focuses on the right to move freely across borders, knowing that there is a retention of human rights and workers' rights with consistency in which such rights are applied. With that brief background, let's go right to the questions of our panelists. How will Brexit impact the financial services sector? And this has a number of different components. So we'll start with the regulatory uncertainty, and I'll ask James to cover that question.
Thanks, Alex. So I think the most obvious example of the impact on Brexit in the financial services sector so far is that regulatory uncertainty, with the likely loss of passporting requiring regulators in the UK and the EU to consider how to ensure there's no risk to financial stability. The regulators in the UK have been making calming statements, but the potential restructuring required by firms is not likely to be straightforward.
Well, thank you, James. And I guess the other piece to this is passporting, and perhaps, Andrew, you can cover that, and followed by Charles.
Yeah, absolutely. Thanks, Alex. So in terms of the way Europe has worked, passporting has been a key way of how firms do business across Europe. So effectively, the way the regime works at the moment is that the firm is authorised in their home state by the competent authority and then allowed to carry on the same activities in a different European state, but without the need to be specifically approved by the competent authority of that particular jurisdiction. So in terms of passporting, it's really been fundamental to how financial services firms have facilitated promotion of funds and services across the channel, and it's allowed reciprocation, which has benefited all of those accessing financial services. So I think as much as the Schengen Agreement has been in place to facilitate the free movement of people between the 28 European states, the passporting regime has provided a very similar conduit for the flow of financial services across Europe. And I really think that losing passporting would be a terrible blow. The other thing to think about is that the FCA has clearly come out and said that passporting will continue immediately post-Brexit, with the working date being the end of 2020, when we see a change to the current format. They've also committed that there'll be a temporary passporting regime in place for EU firms wishing to continue to take advantage of passporting into the UK and accessing UK domiciled financial services. So the main regulator, the conduct regulator in the UK, is taking steps and measures to have a framework in place, regardless of whether there is a soft or hard Brexit. I think while that side of passporting is definitely known for the next few years, what we don't know really is how passporting is going to work for those European firms who are trying to passport into Europe. That part isn't guaranteed yet, and it's really down to what the state want to do themselves and the home state regulators in each country. So while there'll no doubt be some changes to the passporting regime, at the moment it's uncertain what will happen. And our Prime Minister has recently come out and said she won't accept taking passporting in its current guise from Europe. So there's some definite uncertainty there. I think Charles has probably got some additional thoughts to add to that.
Yes, thanks. In terms of the passporting piece, you've got the two-way process, as Andrew said. The EIOPA, which is the European Insurance and Occupational Pensions Authority, so it's the sort of super regulatory body for the national competent authorities, has come out and it is telling its national competent authorities to say contingency plans must be in place for service continuity. There is no reliance on any agreement in terms of passporting post-Brexit, and therefore they should be preparing for hard Brexit. And this seems to be the message that is coming back and forth, continuing back and forth between the two sets of negotiators, shall we say, about what Brexit might mean in the future.
Thank you, Charles. I guess as far as the potential overall talent exodus as a result of Brexit, James, do you want to cover that point?
Yeah, sure, Alex. While statistics show there's been no loss of talent in the 12 months since the Brexit vote, it seems highly likely that there will be some loss of talent in the financial services sector following Brexit, as large firms are already talking about setting up new headquarters in cities like Frankfurt, Amsterdam, Dublin, Paris. However, a recent survey by the Financial Times indicates that the day one effect will be much smaller than originally envisaged. For example, Citibank have stated that they will continue to invest in London. The Financial Times survey suggested that around 4,600 jobs are estimated to move as firms prepare for Brexit, which is around 6% of the total financial services workforce, compared to an estimate by one of the big four accounting firms of 10,500. However, the longer-term outcome is less certain, and I personally think it will depend where, for example, banks' clients structure their operations after Brexit, rather than actually where the financial services firms are situated themselves.
Thank you, James. And I guess, Charles, the need for data sharing agreement with the European Union seems to be a hot topic as well. Do you want to cover that?
Yes, I think this is of less concern because the current general data protection regulation is being put into UK law almost as we speak. It's going through Parliament at the moment. I think there's unlikely to be any change because it is giving general principles around data protection. And I think we're just going to have to observe that going forward, whether we're in, out, or doing a deal with the US in terms of how we get on with our trade post Brexit.
Thank you, Charles. I guess, Andrew, do you want to cover specific issues for asset managers?
Yeah, thank you very much. So it's quite an interesting one for asset managers, and the UK asset management industry as a whole is estimated to represent approximately 1% of GDP for the UK. So there's currently 8.1 trillion assets under management in the UK, and of that, approximately 2.6 trillion is managed on behalf of overseas investors. So around half of that number is then from investors who are based in the EEA. So there's a very, very intrinsic link between what happens in Europe and what takes place in the UK asset management industry. So we think that we'll see some interesting results in this space. There's obviously a high number of people who are employed in the asset management industry as well.
So we were talking about passporting, and people talk about passporting and think about it for the future in terms of how they can get access to continuing business. But passporting is also important from a going backwards perspective. So from an insurance industry perspective, it's really important that you can continue to pay your claims, which might be arising out of a 2015 policy underwritten in the UK, but it might be for a German subsidiary in respect of their D&O, directors and officers insurances. And because it's a long-term claim, it may not be payable in the future because you may no longer be authorized to pay claims in Germany because your passport might have disappeared. Lloyd's is grappling with this, and that's why it's trying to set up its Brussels subsidiary. There have been various legal suggestions about having a contractual continuity clause included within various agreements, but then again, that comes into question as to whether those are recognizable in the different legal jurisdictions that are going to exist post-Brexit, possibly.
In 2016, it was estimated to be around 380,000 people who are employed in the asset management industry as a whole. So again, a large proportion of jobs are based in London, with approximately 59% of all asset management jobs being based in the capital. So issues for asset managers will revolve around a number of different concepts. So first of all, access to different markets, as we've touched upon. The passporting side of things that we've previously discussed during this episode, but then also delegation rights and what can happen between where funds are based and where their asset managers are based. So it will also be very dependent on the type of activities and where your actual firm is domiciled. So there are a number of different concepts and issues which need to be ironed out in terms of the impacts of Brexit. It will also depend on what type of regulation you're currently subject to, whether you're a MiFID firm, whether you're an alternative investment fund, or alternatively, whether you are under the UCITS regime.
Thank you, Andrew. And just staying with you, Andrew, for now, I mean, do you want to cover what is the medium-term outlook? What does Brexit imply for the European Union and the Cyprus economy?
Sure, thank you. So this is a great question, really. I think in Europe and around the impacts of Brexit, we've spent a huge amount of time theorising and projecting what the impacts could be for the UK, but we've not really thought about what will happen for the remaining EU 27 and Cypriot economy. I think if we look at a macro level, jurisdictions such as Cyprus are already hotspots for talent and innovation when it comes to financial services and certain particular financial instruments. They're hotspots for the UK or across Europe as being used for hubs for outsourcing, for example, due to the cost and availability of staff and the good levels of maturity in certain markets. So I think there may be some detriment from that perspective. Obviously, the outsourcing pool and the outsourcing drive is not going to be as strong for areas such as Cyprus. But I think there could be a number of benefits as well, because I think what we'll see UK firms setting up branches or subsidiaries in a number of European jurisdictions, which is going to be based upon how receptive and hospitable the home state regulators are post-Brexit, But I think there are options there for some reciprocation. So I think from a banking perspective, as we've seen, and as James touched upon earlier, we may see a number of pull out of the UK in favour of presences in countries such as Germany, where obviously there's a strong economy in places like Frankfurt, and it's a key business centre. So I think, in summary, really, I think you're going to see contradicting forces, making it very hard to look 5 years ahead and predict with any kind of semblance of accuracy just what the impacts of Brexit will be on the UK economy or the EU economy, and notwithstanding the fact that there's also obviously a cash contribution which is swapped between the two at the moment. So I think what it looks like for Europe, there's varying rhetoric, and I don't think anyone's going to be certain at this moment in time.
Great, thank you, Andrew. And I guess shifting to you, James, you want to cover the advantages of short-term disruption and who can take advantage?
If there's no passporting, which we think is likely, then businesses will need to access the EU market following Brexit using an EU-regulated entity, which therefore leads to a choice of jurisdiction within the EU. And firms are currently, as part of their contingency planning, considering where they might set up their EU-regulated entity. That will be governed by the legal framework, the regulatory environment, the tax environment, employment legislation, and potential access to talent. And that choice of jurisdiction we've seen has been typically places like Dublin, Luxembourg, Frankfurt, Paris, or Amsterdam. So in terms of who can take advantage, it might well be those sorts of places. The other point that's relevant is inbound passporting to the UK. So how are the EU and also other jurisdictions like the US going to access the UK? So are they going to be able to set up operations are they going to have to set up operations in the UK and get those regulated?
Thank you, James. And Charles, you want to cover insurers in Malta?
Yeah, sure. There's most of the insurers have started on their Brexit planning and scenarios. We've seen some of the regulators actively encouraging people to come across to their various jurisdictions. So there's been some sort of regulatory arbitrage attempt going on, or regulatory competition, if you like, between various locations. Paris says it's really open for business. Dublin and Luxembourg are encouraging people to come and talk to them. The EU is keen that there should be no regulatory arbitrage across the various jurisdictions. And they want it to be a level playing field, which is what part of the EU movement is towards, is a level playing field across the 27 states that are going to be left. And in terms of thinking about where one wants to go, it depends on your business within that within the EU. So if you're only dealing with one area, one nation state, then you can probably get away with a branch. But if you want to deal with multiple elements of the EU, then you need to be thinking about setting up a subsidiary. A branch can only be authorised in one state, whereas a subsidiary can be authorised and passporting around within all of the states of the EU.
Thank you, Charles. Andrew, do you have any thoughts on this topic?
Absolutely. So one of the things we were thinking about in terms of how we got together and answered this question was about whether there was any party that could take advantage of it, but then also at the same time, if there are any parties who are now currently particularly poised to take advantage of what's happening and some of the changes taking place. I think we got to the stage of concluding that there isn't anyone who's necessarily poised, because there are just simply too many unknowns to have a clear strategy to really benefit from so many of the factors which are not pinned down at this moment in time. So I think if you were to look on a global level, though, one of the things which may be interesting is that if we end up in a situation where the UK has a hard Brexit and that separation is in place, it may actually be states such as the US who actually benefit from the Brexit side of things, because under that kind of eventuality, it would be no more advantageous for the European Union or a member of the European Union to undertake business with the UK than it would be for them to undertake business with the US. I think looking though more at a local level, I think arguably consultants and business advisors such as Moore Stephens, Citrin Cooperman are probably the people who are really best placed to take advantage of some of the disruption that's occurring. And that's simply because we're the people who are doing this as a day job, and we're in a position of helping our clients and advising them about the options they can develop to preserve their businesses through what can be quite a disruptive time.
Just thinking about the potential for branch to subsidiary conversion, the PRA has issued guidance recently in terms of the size of businesses that they want to look at in terms of continuing with a branch authorization and having to move to a subsidiary or a legal entity authorization. The bigger you are, and the more you deal with retail customers in the UK and therefore expose yourself and your business to the Financial Services Compensation Scheme, the more likely you are to have to create a subsidiary branch, a subsidiary rather than a legal entity.
Thank you, Charles. And I'd like to shift to Andrew. What aspects of the European Union regulation will the UK retain, and on what terms?
Well, I think it will be interesting to see, because what's been announced already by the PRA, the FCA, the Bank of England, is that all regulation currently being rolled out by the EU will have to continue as business as usual for into 2019 and beyond until the end of 2020. So I think in the very, very short term, there isn't going to be much change. I think the UK will continue to retain those aspects of regulation simply because it has to. I think if we're looking beyond that, then I think there are, certainly from an asset management perspective, there are a few indicators that we can look to at this moment in time. So there are three main pieces of EU legislation that have an impact on asset managers, for example. So I touched upon it earlier, but you've got the Alternative Investment Fund Managers Directive, referred to as AFMD, the Undertaking for Collective Investment in Transferable Securities, or the UCITS Directive, and the Markets in Financial Instruments Directive, or MiFID as it's become commonly known. So one of the things to think about is how that will then impact and interact with what happens post-Brexit and the third country equivalent side of things. And so third country equivalence already exists under the AFMD framework. However, it doesn't necessarily exist under the other types of framework. And so therefore, while there's been no commitment that the regulatory framework that AFMD currently provides will be adopted or pursued for the future of the economic relationship between the UK and the EU, it is acknowledged that there is already a framework in place which is pragmatic and allows innovative solutions to continue some kind of deep and as the regulator refers to it, special partnerships between the UK and the EU. So personally, I don't see a massive divergence in regulation over the next 5 years.
Thank you. Charles, do you have any thoughts on this?
Yes, from an insurance perspective, just running through what is likely to happen. We're currently putting in place the Insurance Distribution Directive in the UK. And I guess much of that will probably stay because there's not a lot of change in terms of what the regulator currently requires of regulated firms to carry out. So the Insurance Distribution Directive is much more of a concern for EU states rather than the UK. And I can't imagine there's going to be much change to that. In terms of the insurers and reinsurers, Solvency II has been in now for 2 or 3 years. There is a third country equivalence regime existing within that, and Bermuda is already a third country equivalent under the Solvency II regime. So there is space for the UK to become equivalent. Within the UK, there has been some pressure for change, but the PRA has not really indicated where that change might come, and I suspect that's because we're waiting to see what the results of the Brexit negotiations are. There's also what's known as the Part 7 regime in the UK, which is dependent on partially on EU directive law, and we don't know whether that will change subsequent to Brexit at all. I suspect not, because it's seen as a good piece of legislation. And I think a lot of what is going to come out of this will depend on the equivalence versus the mutual recognition argument that is currently going on between the negotiators. EU pressing for equivalence, which has a slightly different meaning from the UK's wish for mutual recognition of our own framework and standards.
Thank you, Charles. I guess shifting, James, can you cover what the jurisdiction of the European Court of Justice could look like?
Well, the ECJ is obviously much wider than financial services, but I think it's fair to say that even if the UK did remain or was part of the European Economic Area after Brexit, it would only be required to follow the EU rules that relate to the single market, which some experts suggest make up around 30% of the EU rulebook. One of the government's Brexit red lines is that Britain must leave the jurisdiction of the ECJ, but the transition agreement sets out many circumstances where the ECJ will continue to have jurisdiction during the transition period. So the ECJ's role after the end of that period does remain uncertain, but it seems likely that UK courts would continue to look at ECJ judgments where the laws are the same in any case.
Excellent. Well, thank you. And Andrew, with all the potential risks being highlighted, will Brexit bring any benefit to Britain's financial services?
So in terms of the benefits for the UK around Brexit, this is an interesting question, because I think there have been a number of different media sources and reference sources which point to potential benefits around movement of people, around enhanced trade deals, and also around areas such as the retention of sovereign rights when it comes to law and regulation. I think at the moment, the honest thing to say is that a large amount of what's being put forward as being the benefits is rhetoric at the moment. There isn't any specific source or any clear indicators to point to which suggest that there will be, demonstrable benefits which we can all bank on once the Brexit dust is settled. So I'd be interested to know, Charles, I think you've got a slightly different opinion. What do you think?
I don't think that there will be any substantial benefits to the UK from Brexit. I really genuinely believe that the loss of the passporting rights and the loss of our ability to deal from an insurance perspective, the Lloyd's market, to deal with the UK into the EU and to deal with the US into the EU is going to be a severe impingement on the growth of the insurance industry in the future. That probably won't be played out for 25 years, but I do worry about my sons and daughters' jobs in that timescale.
Yeah, I think that's a good summary, and I think we are struggling to see what the financial, the economical, the regulatory benefits will be out of Brexit.
Thank you, Andrew and Charles. And this next question is really to all of our panelists, and we'll start with you, James. How can financial institutions best prepare themselves for the uncertainty and opportunities that lie ahead?
Well, firms will have already undertaken some contingency planning, and as we've suggested, that contingency planning has been planning for a hard Brexit. But they've got to continue to take advice, act as early as possible, and identify and document their Brexit risks. These may include staffing, legal contracts, regulatory issues like capital adequacy, for example. If a firm needs to move operations or legal entities to EU jurisdictions, then I'd recommend undertaking an options analysis, completing due diligence, and then planning and implementing their restructuring plan. And all of those things can take I would say, up to 2 years. I know some markets are more advanced than others. Charles, have you seen insurers starting to implement their contingency plans yet?
Absolutely, and they're all doing it on a hard Brexit basis. So those with substantial need to be dealing with EU member states are already starting the process of setting up their subsidiaries ready for March 1919 or December 2020, whenever the rules come into play. So they've already engaged with the regulator in the jurisdiction that they have chosen to move to. So if they're going to Dublin, they're engaging with that Dublin regulator, and they're starting on the approval and authorization process. And this is going to take them time, because it might mean that they've got to set up a complex organizational structure over there, and it might mean that they need to do a portfolio transfer of some of their current business that is sitting within the UK book into the EU book, such that they can, or this new EU subsidiary book, such that they can continue to service their clients post-Brexit.
Thanks. And just to add to what James and Charles have said, really, so from looking very much at an asset management focus and some of the other aspects of financial services, have to fully agree, and the recommendation, the advice from our firm is very much prepare. I think, one of the key things that we've seen in terms of firms, not just in the insurance sector, has been about whether individuals, organisations are starting to get authorised in different home states of the EU, and we're seeing that very much. So that's one aspect that people are undertaking to prepare. But it's got to be said, this is going to be costly, and it's going to have a significant impact on a number of different aspects of how firms operate and how they do business in the UK and connected to the UK. So in terms of other strategies, we very much advise our clients around planning, but not just planning in terms of contingencies, but plan for different scenarios. Contingencies could be what happened in the event of X, Y, and Z. And they're quite reactive strategies. So we're trying to encourage our clients to get more on the front foot, look at different financial and prudential scenarios, and make sure they're thinking about what they can do in the intervening period, particularly if there are unknowns associated with Brexit which crystallise, i.e., for example, the pound falling. So planning is definitely what we're encouraging, and start this process as soon as possible.
I think I'd just add to that if you have to change your operating or legal entity structure, you might as well make it fit for future purpose so that you can maximise any benefits if there are any. So just echo that, planning's key, but also certainly in Europe, restructuring takes time because most of the processes require the involvement of the court.
Perfect. Well, I mean, that was kind of our last question on this particular webcast. I wanted to thank all of our speakers for their insights on this very important topic. As you've heard today, the impact of Brexit with respect to financial services is extensive and in many cases still dependent on the results of the final agreement between the UK and the European Union. If you'd like to speak with us about any of the topics discussed, please do not hesitate in contacting a member of our team. Thank you to all of our speakers.